All right, so you know the drill. You send us the sources, and we get you the insights fast.
Exact, like straight to the point, no fluff.
Right to the point. And today we're taking a deep dive into a real estate investment opportunity that, I think we both were kind of like, wow, when we saw this one.
Definitely caught our eye for
They
sure.
got our eye. Yeah, so we're talking about a specific property deal, and, why don't we just get right into it?
Yeah, let's jump in.
What was the, most surprising thing?
Yeah, what's the hook?
Yeah. What was the hook that made you kind of stop and say, wait a minute?
The financing structure, it's just so unusual. You don't
Okay.
see this very often.
You're talking about the 0% financing.
Exactly.
Okay.
Yeah.
Yeah, in today's market, that's practically unheard of. So can you kind of walk us through the mechanics of how that works in this particular deal?
Yeah, so the Sandy Beach property is listed at $1.1 million, and the seller is offering a significant amount of seller financing. We're talking $950,000 out of that $1.1 million.
Oh.
And the really crazy part is that this financing comes with a 0% interest rate for 6 years.
0%, like for 6 years.
Yeah, for 6 years.
For that amount of money, that is just mind-blowing. So what does the initial investment look like then for the buyer in this case?
So the buyers needed to put down $150,000 as a down payment,
Okay.
and then after that it's $3,000 a month.
Oh, okay.
And because there's no interest, every single dollar of that $3,000 goes directly towards paying down the principal on that $950,000 loan.
That's a huge boost to cash flow right off the bat. But I remember there being sort of something on the horizon at the end of those 6 years that we should probably talk about.
Yes, that's right. At the end of the 6 years, there's a pretty hefty balloon payment due. It's about $734,000. So, yeah, there is that looming.
Okay, so how do they plan on dealing with that balloon payment down the line? What's the strategy?
Well, that's where the value add strategy comes into play.
Okay.
They're not just relying on that low interest rate to coast for 6 years. They want to actively increase the value of this property.
All right, so let's switch gears a little bit and talk about the actual property itself. What are we looking at here at Sandy Beach?
So it's a multi-unit building, 4 units, a total of 5 bedrooms.
Okay.
But the real selling point here is the location.
Okay.
It's directly across the street from Sandy Beach in Rincon, Puerto Rico.
Yeah, beachfront property in a very popular location. That in and of itself is quite a bit of value right there. Is it generating any income currently, or was it just sort of sitting there empty?
No, it was already producing income before this proposed deal, and before any renovations, it was bringing in about $100,000 a year.
Okay, so you're not just sort of, riding that 0% interest wave for 6 years, hoping for the best. There's a plan in place to really juice this thing up.
Absolutely.
So tell me about the value add plan. What are they aiming to do here?
So the plan involves a 3-phase renovation totaling $150,000. And the overall goal here is to really significantly increase both the market value of the property and the amount of rent it can bring in.
Okay, and so what specific improvements are they looking at doing with that $150,000?
Well, they want to take full advantage of those ocean views.
Of course.
Update the kitchens and bathrooms, give it some really nice curb appeal, and they're even considering adding a hot tub.
Oh, wow.
They're really trying to attract that higher-end short-term rental market.
Makes sense. Okay, so how much are they expecting the income to increase after they implement all these improvements?
Well, their projections are pretty ambitious. They're hoping to boost annual revenue by over $70,000 once the renovations are done.
That's a lot. That is a lot.
That's a huge jump, yeah.
What does that mean in terms of how quickly they'll see a return on that $150,000 renovation investment?
So they're projecting almost a 50% annual return on that $150,000, and they're expecting to recoup those costs in about 2 years.
Wow. All right, so let's bring it back to that $734,000 balloon payment.
Right.
It seems like the value add strategy is their main way to address that, but walk me through exactly how they envision that playing out.
So the idea is that they're going to boost the property's value so much and increase that rental income so significantly within those 6 years that they'll be able to refinance,
Okay.
get a traditional mortgage,
Uh-huh.
pay off that balloon payment before it comes due.
Oh, I see. So they're hoping to essentially just replace that seller financing with a normal loan from a bank.
Exactly.
Got it. Okay, well, that makes sense. It's a race against time, but at least there's a clear plan in place. So what about the overall market in Rincon? How does that factor into all of this?
Yeah, so Rincon has a very strong short-term rental market.
Okay.
There's a lot of tourist demand, which keeps those occupancy rates high and the rental prices competitive.
Huh.
And they also mentioned in the source material that Puerto Rico has some tax incentives for investors, like Act 60.
Right, Act 60. Yeah, I've heard of that.
So that could be a bonus as well.
Okay, so let's say somebody is listening to this and they're intrigued. How would an investor actually get involved in a deal like this?
So this investment is structured as an equity partnership through something called the PR Vacation Fund.
Okay.
Investors put in money, they become part owners of the property.
And how are the profits from the property split between everybody?
All right, so first, all the operating costs are covered, things like property management, utilities, maintenance.
Mm-hmm.
Then they take out that $3,000 a month loan payment. And after all of that, whatever's left over, the net operating profit, that gets split 50-50 between PR Vacation Fund and the investor group.
Okay, so everybody is incentivized to make this thing work.
Exactly.
All right, well, let's talk numbers. What kind of returns are we looking at here?
So the source is projected a net annual cash flow of about $36,000. And that's after all the expenses and the loan payment.
Okay.
That's the amount that gets split 50-50. And based on that initial $150,000 investment from the investors, that translates to an initial cash-on-cash return of over 21%.
That's pretty attractive right off the bat. Are there any other financial benefits that investors can expect besides that annual cash flow?
Yeah, so on top of that, cash flow investors also benefit from the equity that's being built in the property as the loan gets paid down every month.
Right.
And remember, this is a 0% interest loan, so that principal reduction is happening much faster than it would with a typical mortgage.
Right. A lot of those early payments on a regular mortgage are just going to the interest.
Exactly. And then, of course, like with any real estate investment, there's always the potential for appreciation.
Yeah. The market could go up.
Exactly.
Okay, so we've talked about this incredible financing. We've talked about the potential for some pretty nice returns, but, every investment comes with risks. So what did the sources identify as the biggest risk in this Sandy Beach deal?
Yeah, the big one is that balloon payment,
Yeah.
$734,000 at the end of 6 years. If that value add strategy doesn't work out as planned and the property doesn't increase in value enough, refinancing could become a big problem.
And just to reiterate, what's the plan to prevent that from happening?
Well, it all hinges on the success of that renovation plan. They're trying to make the property so attractive and so profitable that refinancing won't be an issue.
Got it. All right, so let's wrap this up. What are our key takeaways here? What makes this Sandy Beach deal stand out?
So there are a few things that really make this one unique. The prime beachfront location, the fact that it's already generating a solid income stream,
Mm-hmm.
that unbelievable 0% seller financing, which gives a ton of leverage and strong early cash flow, and then that really proactive value add plan that they're using to hopefully deal with that balloon payment down the road and generate those big returns.
Yeah, it's definitely a really interesting scenario with a pretty aggressive strategy behind it. So, for our listeners out there, I'd like to leave you with something to think about. Given this unique financing structure and all the moving parts involved, what other factors, external or internal, could really influence whether or not an investment like this succeeds over that 6-year time frame? What else should you be considering as you evaluate opportunities like this? Thanks for joining us on this deep dive into the Sandy Beach property.
See you next time.